We have reached the top of the hour here, so excited to welcome everyone to the first of the 2025 Sikich Yellowbook series. Excited to have you joining us today. Thank you for those that are returning and have participated in our Yellowbook series before. We've got a great lineup for you in 2025. Today we're going to start things off covering single audits, updates and refreshers to the single audit guidance that is out there. We've got two great presenters for you. We do have a few housekeeping things to cover first, so I'll turn things over to Rachel to go through those items. But then again, thank you for joining us, and Rachel, the floor is yours.
Awesome. Thank you, Anthony. So yes, welcome to our first session of the 2025 Yellowbook training series. So glad you all could be with us today. We will be discussing single audit in this session. So quick introduction, I am Rachel Windett and I'm with our Sikich University team and I'll be on to support you all today. We also have Rachel Hawley, who is on our marketing team. She'll be joining us and assisting with questions, any sort of CPE questions and whatnot. So for today, for CPE, we will have 3 polls. As they come up during the session, please complete all 3 of the polls to receive the full 1 credit of CPE. If you're joining via your browser, ensure that your screen is set to full screen because we know that those polls can kind of be hidden when the program is minimized. This recording will be made available after the fact on demand in a few days. You'll receive an email with that information. But for this session, we're joined by Matt Geerdes and Gina King. So Matt is a principal here at Sikich. He's a public accounting leader with nearly 24 years of experience providing audit and consulting services. He works closely with entities in the government and non-for-profit sectors, including municipalities, state agencies, state universities, community college school districts, special districts, and educational foundations. Gina is an audit manager with us, with the experience in auditing a variety of industries, including governmental entities and not-for-profit organizations. Specifically, she specializes in serving community college school districts and villages. So thank you all again for joining us, and I will hand it over to Matt and Gina to kick us off.
All right, make sure the microphone's on. There we go. So good morning or good afternoon, depending on where you're located in the country. So it's a pleasure to be talking to you all today and going over the fun things that are happening over in the single audit universe. We've got some updates that we want to talk to you about, but also go through a couple of refreshers for those of you that maybe haven't looked at a single audit in a while, and with the level of federal funding that's flowing out of DC these days, and including some interruptions with that federal funding, of course. The single audit is definitely something that comes into play in the attest world. So that's what we're going to talk about. First part we're going to talk about is our little legal disclaimer that you can take a look at when you look at our materials. So, as brief introduction, Rachel has teed off. I've been in practice now for 24 years. A little scary it's been along that long, but it is what it is. So specifically, I'm in our Naperville office and service clients all across the country, doing a lot of different types of things: audits, compliance, consulting, you name it, I've probably done it. So Gina, you want to talk a little bit about yourself?
Yeah. So like Rachel said, Gina King, I'm a manager here at Sikich. I've been here my whole career. It's going to be almost 11 years. So yeah, been a long time for me as well, not as long as Matt. Pretty much my focus on government clients with the specialty with the compliance and Yellowbook. And I'm out in Naperville as well.
All right. Okay, so let's dive right into what we're going to be talking about during our time together. So first thing is that we're just going to go through an overview of the single audit process. We'll talk about some of those triggers, what requires a single audit. Certain entities go through a single audit every single year, so this wouldn't be a surprise. But then also we're going to talk a little bit about planning for the single audit. Now, we do have a lot of auditors that are on the presentation today, but we also have auditees, and it's important for the auditees to be paying attention to this as well, to really get an understanding of what it is an auditor is doing, why it is we're asking for what we're asking, and what's the end result for thinking about an audit. So We'll talk about compliance requirement testing, what it is that actually within the meat and potatoes of the actual testing process, and then we'll go through the completion process as well. And then we're also going to talk a little bit about our preparation for a single audit, what needs to happen from both the auditor and the auditee's perspective. And then if we have some time, we'll have a Q&A session as well. But you don't have to wait for the Q&A session. If you want to type your questions into through the system, we'll get those read to us, and we'll take a look and see how much time we've got. We'll try to address what we can during our time together. If we don't have time to address every single question, one of us will be reaching out and can directly connect you with the answer. So, all right, let's get started with our first polling question. And this is the one where, if we can get that popped up on the screen, this is not one where there's a right or a wrong answer here. This is just something where we like to do is get a flavor of who is sitting in our audience. And specifically, have you ever been involved with a single audit? We've got a couple of responses that kind of lay out the various scenarios. Basically, yeah, I've never been involved in a single audit and would love to know what it talks about, all the way up from to the point of, yes, we have been through a single audit. I go through it every year, and I'm a major key in the process for responding to the auditor's requests and understanding what those compliance requirements are. So we'll leave that open now. We've got a couple more seconds. We'll want to leave that open just to make sure everybody gets a chance to respond for your CPE purposes. We'll leave that open a couple more seconds. So we're right about 90%. So that's about where I want to see. Okay. We've got about 50% of the folks have been involved in the single audit process. We've got 20% have had single audits, but just never had to be involved with it. And then a few of them have never been through it, or I'm just going through it for the first time. So great dichotomy of responses here. So, okay, let's go into some of the let's go into the first part of our agenda, our time together. We're going to talk about an overview of the single audit. What is it? How is it different from a financial statement engagement audit, auditing of the financial statements? What sort of reports come out? Who's using the financial statements? So to tee it off, what we'll do is that we'll talk specifically about the history of the single audit. It was originally in 1984 is when the Single Audit Act was passed by Congress. And at the same time, OMB Circular A128, which is guidance from the Office of Management Budget, which is under the White House, came out and provided guidance on these cost provisions and how all of this worked. We will fast forward to 1990, and then OMB Circular A133, which is, if you've been in the single audit space, should sound very familiar, came out for its first iteration and was one of the linchpins and drivers of how a single audit is going to be executed from the auditor's perspective. We fast forward to 1996, the Single Audit Act gets amended with some updates and a couple of other things talking about the circulars as well. We go to 2007, Circular A133 gets a revision, and it talks about updates to the thresholds, talks about update to what has to be thought about for compliance requirements, and then nothing happens all the way up until 2014. 2014, that's the big one, because that's when we had the uniform guidance comes into place. What happened is that OMB and Congress looked and saw that, one, maybe the thresholds for triggering a single audit needed to be revised based on the amount of federal funds that are flowing through, the administrative burden that in some cases the single audit can impose upon entities, and also the fact that when you're doing a single audit, you're not only looking at the Single Audit Act, but you are also looking at Circular A133, Circular A128, Circular A110. There were a number of circulars that were out there. Well, what the uniform guidance did was basically take everything and put it into one source. So when it comes to looking at where are we looking at for the guidance on the single audit, we go to the uniform guidance. So now, 2024, 10 years later, what happens is that the uniform guidance gets some revisions, and it's effective. These revisions are effective for audit periods beginning on or after October 1st, 2024. That's important. I want you to keep that in mind. So essentially, for the revisions for the uniform guidance, which talks about thresholds and a couple other things as well, that's effective for fiscal year ended September 30th, 2025 and after. So keep in mind with that. So we're going to talk about that a little bit more when we get to that next some later portion of our presentation. Okay, so a single audit. Now that we talked about the history, well, what is it? Well, the objective is to ensure that the entity who receives federal funding is complying with the direct and material compliance requirements of each major program, with a focus on federal funding. There are state single audits that are out there, and there can even be other grant agreements and other types of things, but a single audit is talking about federal funding. And it's performed in believe it or not, three sets of auditing standards. You're starting off with the AICPA's Generally Accepted Auditing Standards, a GAS audit. But then on top of that, you're layering the Generally Accepted Government Auditing Standards, GAGAS, GAS, or the Yellowbook is the most common terminology that's used. And then on top of that, we're looking at the uniform guidance. So we're looking at all of these things. Believe it or not, these standards do complement each other. So if you're doing something under these standards, a lot of these procedures, planning, risk, things that go into an audit complement each other. So you're not doing 3 sets of files or 3 sets of work papers for 3 sets of standards. It doesn't work like that. So the auditor opinion, what is actually coming out of this thing is that there's a fair presentation of the financial statements, and besides the financial statements, it's including the Schedule of Expenditures of Federal Awards. It's called the CFA. You're going to hear that terminology and that acronym quite a bit. So, and we're dealing with compliance with federal laws, regulations, statutes, and agreements applicable to each major program. So when you're thinking about what is a single audit, how does that compare to a financial statement audit? Well, I've got here is when we look at a financial statement audit on just the AICPA standards, that first layer, we're doing an opinion on the financial statements and the applicable footnotes, but then we're also considering internal controls. We're also reporting under SAS 114, which is an auditing standard put out by the AICPA about how we communicate to governance as a result of our engagement. 115 talks about our communications of internal control matters that we've identified. And then also we're going to have state reporting such as a school district AFR, a local government AFR that has to get filed with the state comptroller, a TIF or a CID or PID reporting that are required for individual municipalities or that get apply up to the state level. Certain states also have state-specific single audits, as I mentioned before, have their own requirements and reports, but that's separate from what we're talking about. So now compare that to what we have to issue with a single audit, which covers, as I said, GAS, GAGAS, and the uniform guidance. It's the same, but we're adding on a couple of things as well because we've got a couple of layers of standards we're adding on. We're taking internal controls and we are including tests of operating effectiveness over compliance. Very specific. We're not opining on it, but we are talking about operating effectiveness. It is a requirement of the uniform guidance that we have to consider effectiveness testing of controls. We're also including our Yellowbook report on internal control over compliance. So those talks about maybe some of the non-federal pieces, but we do have to consider that during these engagements. And then, of course, the uniform guidance report where we're actually opining on compliance. We are talking about our internal control over compliance results. We're talking about our opinion on the schedule of expenditures of federal awards. And then when we're all said and done, the last thing we're going to do is, as far as a deliverable, is that you're filing what's called a data collection form, and you're filing that with the Federal Audit Clearinghouse. That's quite a bit, right? Well, we'll talk a little bit about each piece when we'll also go into a little bit more specifics about the data collection form and some of those deliverables a little bit later in our presentation. Okay, so who's using a single audit? Well, it starts off with grant-making agencies. They're the ones that can be, they're primarily the users of these single audits as well. Now, a grant-making agency starts off with a federal agency. So if you're getting direct federal funding from, say, the Department of Education or the Department of Transportation, that's your federal agency. However, you can still be subject to the single audit if the funds originated from, say, a state agency. So let's say you are a school district and you're in the state of California and you're receiving funds originally that from the California Department of Education. But those funds that the California Department of Education got originally came from the U.S. Department of Education. Well, it flows through all the way to your district as federal funding, so therefore you're in scope of the single audit. So these non-federal entities who award funds to subrecipients, very commonly state agencies, local agencies such as a city, a county, school district, Indian tribes, institutions of higher education, not-for-profits. And then the users of the financial statements is also processed everything centrally for the data collection form going through the Federal Audit Clearinghouse. And what it does is that it aggregates all the information so that you don't have to provide information to the state or the Department of Ed or the Department of Transportation or a local grantor unless they specifically ask for it. The idea of the centralized processing is that everyone, including the general public, can go to the Federal Audit Clearinghouse, find that information, and pull it down. An example of a state entity that does this as well is the state of Illinois' Grant Accountability and Transparency Unit that pulls down information that's filed with the Federal Audit Clearinghouse, and then they use that for their own monitoring purposes for pass-through funds and other things that that particular unit does. Okay, so talked about overview, we've talked about who's using a single audit, what's going to trigger a single audit. So that's the important thing. Now, as I mentioned before, this is the big thing. If you want to set a couple of slides that you really want to make sure you print and highlight and pay attention to, this is one of them. Is that when a non-federal entity expends federal awards, either directly or is passing it through to a subrecipient, and it's more than, this is where it gets a little weird because of the timing of the uniform guidance updates. So if you are a fiscal year end that is ending August 31st, 2025 and earlier, the threshold is $750,000. That's the old triggers for a single audit. If your fiscal year ends September 30th, 2025 and later, then you are subject to the uniform guidance revisions from 2024, and that threshold goes up to $1 million. The reason the feds raised that threshold is they looked at the number of single audits, they looked at the size of the grants, and they said, okay, if we increase this, one, are we making sure that auditors are auditing these funds sufficiently for the federal government's purposes? And can we reduce some of the administrative burden for smaller units of government or not-for-profits or other entities that are using these federal funds? And the nice thing is that the answer is yes. The feds did this in 2007 and 2014 when they raised the thresholds. Well, it's going to happen again, is that they're going to capture a lot of it and reduce some of the burden. So some entities are going to fall off as far as requiring the need for a single audit. So the big thing here, you cannot early adopt the threshold increase. You have to follow that guidance. It's very explicit. You cannot early adopt. And the determination is based on expenditures only. Some CFAs present revenues depending on the local jurisdiction and requirements, and they may want to present that. And you can present that on a CFA. However, when it comes to single audit determination, revenues are not considered. It is only expenditures. So when we're talking about federal awards, what is it? The uniform guidance actually specifically talks about this and says, all right, well, like, what is it? Now, in some cases, it is expenditures of cash received directly from the Fed or passed through. But this can also be non-cash. It could be commodities. It could be vaccines or from the Department of Health. There are a lot of different things that could qualify this. So cash and non-cash that's received. It can also include loan and loan guarantees, interest subsidies, insurance. So that's federal assistance A second piece of it as well is also looking at federal cost reimbursement contracts under the FAR that you're receiving directly from federal agencies or indirectly. So, and these are all governed by terms and conditions in the grant agreements themselves, cooperative agreements, other agreements and contracts that are subject. So when you are doing this, the question then is because, well, when you have a federal award, when it's considered expended, since there's different types of awards, how do you know when you meet the definition of you've expended it? So I've got a pretty cool table here that walks you through specifically of when you actually have called this an expenditure. Well, grants and cost reimbursements, it's when you actually expend the funds or the expense transaction occurs. But in other cases, it's a little bit different. So insurance can kick in, for example, when the insurance is in force. If you have program income that your federal grant program generates, and then you turn around and expend those in accordance with the provisions of the grant, well, when do you call that an expenditure? Well, this is also here. It's when it's used and then it's received. So donated property, when do you recognize that? Well, in this case, it's also when the property is received. So there's different types of federal awards that call into play. Now, what does a CFA actually look like? You're probably wondering that if you're not familiar with that. So this is an example that pulled together here. And as you can see on here as well, there are a couple of things that I want you to call attention to. One is that you're listing it by what's called the ALN, which is called the Assistance Listing Number. It's basically a catalog that the federal government keeps to identify specifically, well, what program is generated and puts out the funds for which federal department, and there are lots. So the also included are a couple of other required elements under the uniform guidance that have to be included. Certain grants have like characteristics, compliance requirements, goals, and objectives. So the federal government actually clusters these grants, and you present a cluster on the CFA as well, and that's how you present those for the users of the financial statements. The OMB actually puts out a list in its annual compliance supplement that talks about what's a cluster and what's not a cluster. And there's specific lists of identified clusters that if a grant program is part of the cluster, that you have to consider that as well. Something else is that you also will get direct awards. So if you actually have awards that are coming directly from the feds and paid down to your entity, they're specifically separately identified. If something is passed through from another unit of government or a not-for-profit or an institution of higher education, for example, and you've spent those funds, that's also going to be picked up here as well. On our example here on this other program side, you can see specifically for the WIC program, there is direct funds that are coming in from the feds, but then also there is some pass-through money that came in through a county's health department as well. And then you're going to be subtotaling them by these assistance numbers to generate specifically what is our total federal awards as well. Now on a format, our example here is that you're also including information about if you take funds and you're passing them on to a subrecipient who's going to be making the programmatic decisions, not a vendor situation, then you have to specifically identify that on the CFA as well. Although in this particular case, nothing was passed through. So something else which makes common sense here is that the amounts passed through to your subrecipients must be less than or equal to the total expenditures. You can't actually pass through more than you actually were awarded and expended. So, okay. So with that, we are moving on to our second polling question. We'll go ahead and get that up on the screen. So true or false? An organization that has federal fiscal year ended August 31st, 2025, they've spent $900,000 in federal funds. So therefore, they won't need an audit for FY25. Is that true or false? So I'm going to put that up on the screen here as well so you can take a look. And just as a reminder, make sure that you have you respond so that you get your CPE. I'll keep the polling question open for a couple more seconds so we get to close to our target of 90% or better. So again, August 31st fiscal year end, August 31st, 2025 fiscal year end, $900,000 in federal funds expended. So therefore, we don't need a single audit. True or false? All right, so we have reached our magic threshold, and the answer to this is false. Single audit is needed. The threshold for increasing a single audit takes effect for fiscal year ends beginning on or after October 1st, 2024. So therefore, August 31st, 2025, you're under the old guidance, 750. So, okay. So now that we've talked about the triggers for a single audit, let's go into some of the planning for a single audit as well. Essentially, what's got to have to happen for risk, how you think about programs. So we'll talk a little bit about that. Again, auditors are going to be obviously the primary focus of this, but auditees really should be paying attention to this as well. So when we're planning for a single audit, one of the things we have to look at is our auditee's risk profile. That is, it's a required risk-based approach for auditing under uniform guidance, which basically boils down to how much are we going to have to look at. So now there are certain criteria for a low-risk auditee, which I'm going to talk about next. But then if you are a low-risk auditee and you meet those requirements that are very specific in the uniform guidance, as auditors, we're going to look at 20% of all your federal awards. So if you are not a low-risk auditee, then we are required to look at 40% of all your federal awards. So when we think about low-risk auditee, what that means is that we have to look at a couple of different factors. So one, frequency of single audits. If you're having a single audit every year and you don't have any findings, you don't have any exceptions, and a couple other things, yeah, you're probably under a low-risk auditee. But what if you've never had a single audit before? Well, if you've never had a single audit before, and this is your first time, you're automatically not a low-risk auditee. And it's because of the fact that you've never been through the process and it's never been looked at before, so that is an increase in risk under the uniform guidance requirements. We also look at the opinions on those financial statements. Those financial statement opinions has to be considered unmodified in accordance with GAAP. At the bottom, very important thing, if you are presenting on, let's say, modified cash or regulatory basis, automatically you cannot be low risk. The requirements under the uniform guidance is that you have to be unmodified in accordance with US GAAP. We're also looking at past findings as well. We can't have any sort of material weaknesses. We can't have question costs in prior years that are greater than a certain percentage of those program expenditures. And the entity is not considered to be a going concern, meaning that questions about the abilities, operations into the future years. State and local government, not really an issue as much, even though there are requirements you have to think about from the auditor's perspective. But for not-for-profits and higher education, this is a real challenge, especially considering we have seen plenty of institutions of higher education that have had to fold and actually go away, and their students had to transfer. So that does come into play. And then also the timing of required report filings, that data collection form. There's a specific deadline on when that data collection form has to be filed. If it's late, that's going to cause an auditee, to be not a low-risk auditee, and we've got to do more homework, and do more audit work. So once we determine specifically our risk profile for our auditee, then the planning process moves towards determining, well, what are our major programs that we're going to look at? When we talk about a major program, that's a program that's audited under the single audit. So if you go back to our CFA, each one of those lines that had an ALN, an expenditure amount, that's considered a program. Well, that's how we differentiate which programs we're going to audit. And then what we do is that we assess the program based on size, and then we also look at certain risk factors that's in the uniform guidance. And we differentiate them by type A programs, type B programs, and then programs that are so small that they don't even meet that type B threshold. If something's not even at type B, we're not even looking at it, unless we use our auditor's judgment and we want to, but typically we'll tell you that we don't do that. A type A program, the threshold for meeting these expenditures of $750,000 or more for the fiscal years that all the way up through August 31st, 2025. So when that single audit triggering threshold changes, the type A threshold also changes as well. Something else in here is base amounts subject to adjustment. $750,000 and $1 million is the floor, but depending on the size of the CFA, if you're doing, let's say, an institution of higher education that does a lot of research programs. Very large one. We're talking about hundreds of millions of dollars of federal funds that are expended in a fiscal year. Well, $1 million or $750,000 is awfully small, which means we will be auditing an awful lot. So there are calculations that go in there for increasing that threshold based on your expenditures as well. But the base number is $750 and then $1 million for September 30th, 2025 and after. Now, once we think about the mathematics, we also then look at our Type B programs as well. So I mentioned that 750,000 and $1 million, that's our Type A thresholds. Our Type B threshold, it's 25% of the Type A threshold. So if you do that for fiscal years all the way up through August 31st, 2025, that threshold is $187,500, 25% of the threshold of 750. Then when we get to September 30th, 2025 and later, we're bumping that threshold up to 250,000 because 25% of $1 million, $250,000. A little caveat here that I'm not going to go into too much detail is that if you have a loan that is on your CFA, there is a special step that is required to determine if certain loan programs that are large and could theoretically skew the results, we want to exclude those from the calculations, which means for larger units of government or not-for-profits or higher education on larger CFAs, this could mean is that the threshold for Type A's and Type B's may be lower, and it could mean that you need more auditing because certain programs are just automatically going to be scoped in. Okay, so once you then determine what's a Type A, what's a Type B, and then what's too small, then we actually risk assess and we determine what we're going to audit. So a Type A program, every single program we identify as a Type A that's above the threshold, we are going to risk assess. No ifs, ands, or buts, have to do it. We're going to look at audit frequency, findings. If a program is designated as higher risk by the feds, i.e. Medicaid, Medicaid is a program that is automatically deemed to be higher risk and has a higher probability of being audited. If there's any sort of known fraud or question costs, okay, if you have identified and you've analyzed that program for the fiscal year and it's high risk, it's required to be audited. So if it's not high risk, meaning a low risk program, a Type A, we may not have to audit it. We got a little bit more work to do, but it doesn't mean you're out of the woods, but it means possibility that you may be able to skip the program. So we've done all our Type A's. We figured out what's our high risk. We figured out what's our low risk. And if we get to our coverage threshold, remember 20% or 40%, if we've got that threshold, we can stop. We don't have to do anything else because we've identified what we have to look at. If we have not met that threshold, we go to the Type B's and we're going to do the same thing. We're going to look at the risk programs to replace 25% of those Type A programs. This is where it can get a little weird. Fortunately, most auditors have really good work papers and guides that come out from the uniform guidance and from various vendors that specifically talk you through how to do this type of testing and considerations and planning. So you're going to do the same thing for the Type B's. And then once again, if you've got all your Type A's that are high risk, you've identified any Type B's that are high risk, and you've met the threshold, you're done. If you haven't, then what you need to do is then select additional Type A's and Type B programs to audit until you've actually met your coverage. So planning is pretty intense as well. Another common thing when it comes to planning, if you're thinking about an audit engagement, is materiality. And we do materiality thresholds. There are certain calculations and thresholds that have to be done, and we're doing this by major program. So if you have a single audit where you have multiple different programs, you're going to have, each program is going to have a materiality calculation. Okay, so we've talked about planning. Let's get into some of the actual, what do you have to do for compliance? So Gina, why don't you take it from here?
All right, thanks, Matt. So we're going to talk about the compliance supplement. So what is it? The compliance supplement, it's a document. You can go to the next slide. Thanks. It's a document that identifies existing compliance requirements that the federal government expects to be considered as part of an audit. So without the supplement, auditors would need to do a lot of research, on the laws, regulations for each program under audit to determine which compliance supplements are important for the federal government and could have a direct and material effect on a program. So providing this supplement is just more an efficient, cost-effective approach and provides information to auditors to understand federal program objectives, procedures, and requirements subject to audit. So this supplement highlights all new and discontinued programs and also indicates which programs are higher risk. So that's kind of what Matt talked about earlier. If a program is higher risk, it's kind of important when you're going to talk about that type A and type B threshold. So federal agencies are responsible for annually informing the OMB of any needed updates to the supplement. So you'll kind of see a new supplement come out every year. The most recent one came out in May, and that was effective for year ends beginning after 6/30 of 2023. However, if you're going to be auditing a 4/30/2024 audit, you're going to be still following the 2023 compliance supplement. So kind of the next part that we're going to talk about is part 2, which is the matrix of the compliance requirement. So what this matrix is, it kind of helps us determine what requirements are applicable for a particular program. It kind of starts being our roadmap to start testing the program, and it's used to help us test what specific program to ensure that the requirements are being met and that what is being subject to audit. So some key changes on this matrix will be highlighted in yellow and they'll be bolded. This will help determine what has changed since the last supplement. So that's why it's important to use that most up-to-date compliance supplement that's applicable to the client's year end, since requirements can just change from year to year. 1 year cash management can be applicable, but then it's not the following year. So no need to overtest when it's not required. If there is a Y indicated under that particular requirement, then it's going to be applicable. So although it is labeled as a yes, it doesn't mean it's direct and material. So that's going to come with reviewing the program under audit and then performing those procedures to determine what is truly applicable to test. When a requirement is indicated with an N, it's been identified by the federal agency as not being subject to audit. So we wouldn't be required to test that particular requirement. So a few years ago, the supplement kind of trimmed back the number of requirements that's going to be selected with a maximum of 6 for each program. So this was determined just to focus on the most applicable requirements, but activities allowed and unallowed that's kind of coupled with allowable costs and cost principles, they're kind of treated as one program. So you'll kind of notice in the supplement, they'll either be both yes or both no. So here's just kind of a snippet of what that matrix is going to look like. So if you search for a program in part 2, so as you see for this particular program, they actually only had 4 attributes that were marked as yes. So if we don't see our program out listed in part 2, we're going to now jump over to part 7. This is for programs not included in the supplement. So then this section becomes our guide to identify what types of compliance requirements are going to be required to test. We're going to review that federal award and then determine what could have a direct and material effect on the program. So any of the 12 compliance requirements could be applicable, and that 6 maximum mandate that is used in part 2 is actually not required here. Some programs might have 5 compliance requirements after reviewing the agreement, but potentially there could be 7 after we looked into the agreement that we got to incorporate into our audit. So what we do is we actually recommend just kind of grabbing that part 7 from the supplement, documenting why it was determined that certain attributes were not required, and then just keeping that in our file. So the next part of the supplement is part 3. So this is kind of diving into a little more detail of the compliance supplement, the 12 compliance requirements that they have. So here is the first 7, and you'll actually notice that D is no longer in use. This is used to be the Davis-Bacon Act. And then going on to the next slide here, we'll see these are the next 5 required ones that they have. And again, noting that K is no longer in use. This used to be the real property acquisition and relocation assistance. However, some agencies have made the Davis-Bacon Act actually part of the special test and provision requirement. So that's going to be just documented when you're reviewing the program. So part 3, what this does is it describes the related objectives that the auditor must consider, and the auditor is responsible for achieving these stated audit objectives for the applicable compliance requirements. There are suggested audit procedures that are provided to just help the auditor in planning and performing the tests. Since these are suggested, auditor judgment is still necessary to determine when the procedures are sufficient and achieve those audit objectives. This part also just includes audit objectives and suggested audit procedures to test internal control. However, the auditor must determine the specific procedures to test internal control on a case-by-case basis. So then the next section is part 4. This is the agency program requirements. So this is for each program, and that is included in the supplement. Part 4 is going to discuss this just in like greater detail. It talks about the objectives, procedures, compliance requirements specific to that program. So that's going to help the auditors see what's specifically related and applicable to the program and what we got to look at in more detail. So the description of the program is pretty general in nature. So the auditor just must obtain an understanding of the applicable compliance requirement to properly plan the audit. So when any of the compliance requirements are applicable to the program under audit, Part 4 provides that additional information specific to the program and mentions to the auditor what they should be looking for, but still determining if that requirement is direct material for that specific client. If a requirement is marked as NA, it either means there are no compliance requirements specific to that program, or the auditor is just not required to test that compliance attribute. Just wanted to mention special tests and provisions are unique for each program. So what you'll see that's specific to the program, and that'll be listed out in that part 4. So the next thing that we wanted to do is kind of just talk about the top 5 compliance requirements. These 5 we kind of see pretty consistently when we're auditing our federal program. So we kind of want to do a deeper dive on each one individually. So the first one that we're going to talk about is activities allowed or unallowed. And that's kind of coupled again with allowable costs and costs principles. So for this attribute, what we need to determine is that the funds were used appropriately. And then what we did is we kind of just listed out a few unallowable costs that are common, but the grant agreement will typically list these out, what are allowable activities and costs, or they're going to show you what is clear unallowable costs, kind of what we saw with those ARPA COVID funds. They kind of told us specifically what was not allowable to use those funds for. So one of the tests that we do to determine for these attributes is obtaining, we can go to the next slide, is what we do is we obtain a list of expenses that is spent on the program. And then we perform procedures to verify if they were for an allowable activity or a cost. So if these funds were actually used on payroll transactions, we're then going to determine individual's wage or salary, determine that it's reasonable, and then see if that payroll charged with some personal activity reports such as timesheets and payroll registers. A common error that just could come up from this test is that that activity or cost does not appear reasonable for the federal program. So if you're unsure of an expense, just inquire of the client what the cost was for and determine if it was an allowed cost or not. Another error is just if the client can't provide sufficient documentation or the support provided does not accurately reflect the work performed. So that's just going to be a cause of concern that the funds were not used properly. And then lastly, another error that could kind of pop up is just not having the appropriate approval of timesheets. So a lot of payroll now is now processed electronically, where the supervisor, they'll go into the system, approve the timesheets. But at times, in order just to get payroll process, get it out the door, the administrator, they'll just approve all the timesheets. So although there is that step from the administrative standpoint, there should be approval from the employee's direct supervisor verifying that time is accurate and timely. So the next attribute that we're going to go over is cash management. And what this is, it's to determine the timing of funds between the federal agency and the auditee. So most grants are funded on the reimbursement basis. So that's where the auditee is going to spend those funds. There were requests for reimbursement from the agencies. But then what we do is for these clients, we kind of take a sample of the reimbursement requests that were submitted, and then we were compare it to the expenses that occurred. Other grants could be on the advanced payment method. So that's where the auditee is going to draw down funds from a management system. then the funds get dispersed after. So a common example of this is related to the Student Financial Assistance Cluster. Institutions draw down the refund, then they distribute the funds to the students after the fact. However, this advance payment, this disbursement does need to get completed within 3 business days. So a common error with this test is auditees requesting that reimbursement before expenses occurred, or then they requested too much. So this is just the auditee just not following the guidance of that reimbursement process. And then the other type of error that could come up is drawing down those funds and not dispersing the funds within that time requirement. So if the funds aren't dispersed timely, then that's going to be considered excess cost for the client. The next attribute we're going to go over is eligibility. So that's where we got to conclude that the auditee has a clear process to determine that those were eligible for the funds, that they were eligible to receive the funds, but we also got to make sure that they also received the correct amount. So many factors kind of go into determining eligibility, which is dependent on the federal program. The compliance supplement will detail out what the auditee should be checking for and who those funds can get awarded to. So we just kind of listed out some common eligibility criteria here that kind of just could come into play if a recipient is eligible or how much they could be eligible for. So just some tests that we do to determine eligibility is we ask the auditee to provide us a list of recipients of those funds. That's going to help us determine our sample size. Larger the population, going to be the larger the sample size we'll probably have to look at. And then based on that, and based on the federal program eligibility requirements, we're going to ask for the documentation to support the recipient's eligibility. Some things we're going to ask for: W-2, driver's license, utility bills, or specific to student financial aid, we look at ICERs, transcript, student ledgers, just things like that. So just some errors is if we were provided does not give us enough evidence to show that the recipient was eligible, just talk to the client again, get a little bit more information, because we got to gain enough knowledge to support our conclusion that the recipient was eligible. But on the other hand, we did determine that that student or individual was eligible for that funding. However, they received the incorrect amount. This is kind of a common error that we could see just because certain charts could be used. Maybe we used the wrong chart, maybe we looked at the wrong line. So that's just going to kind of come into play some of the time. The next attribute is procurement and suspension and debarment. So what we need to do is to make sure that when procurement is applicable for a federal program, that the auditee was following the uniform guidance along with their internal procurement process. So what we did is we listed out some typical procurement requirements, with the main one being that clients have a clear procurement process documented, and then we retain that in our files. And then the other piece of this attribute is that suspension and debarment, where we verify that the auditee didn't use a vendor that was suspended or debarred, meaning that they're not allowed to be using this vendor. Just some reasons why they could be suspended or debarred is just by having an expired license or not having up-to-date certifications. So when it comes to testing procurement, what we ask our clients to provide is bidding documentation for those particular projects for us to see that they went through the right steps, and in most cases selecting that lowest bidder. So testing for suspension and debarment, this actually can be done on a website called sam.gov. All you got to do is create your own individual login, then you'll be able to search for those vendors. If that vendor is active in the system, it's going to have a green dot next to it, and then you know that they are good to go. One clear error is just that the auditee doesn't have a procurement process. It's not documented, so we can't conclude that they're following them if there's nothing documented. Another error is if the auditee, they can't provide us documentation as why a vendor was chosen. And so that's going to fall in the category that then they're not following the process that they set up by their organization. And then lastly, if the auditee uses suspended or debarred vendor, then they kind of didn't do their due diligence when they were looking to select a vendor. So lastly, the attribute that we're going to go over is reporting. This is almost always applicable to our federal programs that we're auditing. Reports that are required are going to get listed out in the grant agreement. They also will get listed out in the compliance supplement. However, not all reports that get listed out could be applicable for your client. So just kind of discuss with them which ones were applicable and which ones weren't. And due dates are typically also tied to the reports, which is going to get set up by the program. So there are 3 different types of reports that you could come across when auditing a program, and that's going to be financial, performance, and special. Financial and performance are probably the most common ones that will be applicable, but at times you can kind of see a special report thrown in there. And one example of just a special reporting is actually when we test the FISAP for the student financial assistance cluster. So how we go about testing reporting is by obtaining reports from our clients and verifying that they were completed properly, correct information was used, and they were also submitted timely. So depending on how many reports were required throughout the year, we might actually use a sample of those forms and then get a sample size to test, so we don't have to test them all. Some common errors is if we can't tie out certain amounts to the documentation that was provided, that's going to raise a question to the client. So for example, if we get a year-end report that lists out how much funding was spent and then we can't tie that back to the records, that's just going to be a question that we'll have. And also most reports are due 30 days after quarter end. So if that's not going to be met, that actually could lead to funding being delayed or subsequent grants being declined by certain agencies in the future. And then I believe we have another polling question that you'll see come up on our screen here. So which of the following is not a compliance requirement area as defined in the annual OMB compliance supplement? So we got cash management, Davis-Bacon Act, reporting, special tests and provisions, or all the above. So give you guys some time to cast your vote here. Keep it open a little bit longer. Okay, I think we're at our magic number here. So the answer is B. It is the Davis-Bacon Act. It is no longer its own separate compliance area. However, just to give you that reminder that you could still see this in the special tests and provision section when you're auditing a program. So to keep that in mind. And then now I'm gonna be passing it back over to Matt.
All right. Well, since interest of time, I'm going to jump just a couple of slides here. These are a couple of other tweaks from the 2024 Uniform Guidance revisions that do have some applicability. You can take a look at the slides as well and dive into that a little bit more. But I want to spend our time together talking about the completion of the single audit, and then more importantly, I want Gina to come back on here. I want everybody to be thinking about what it takes to be ready for a single audit. So, with the single audit completion, what ends up happening is that you're going to get a reporting package. As I mentioned before, you're going to have your Yellowbook report, which is talking about laws and regulations reported over financial statement reporting. Then you're going to have your uniform guidance report, which talks about your opinion on compliance and talks more about compliance, internal controls over compliance for federal awards. And then, of course, in relation or opinion on the CFA as well. Is the CFA accurately stated when it comes to comparing it to the financial statements? We're also going to include the CFA itself is included in the reporting package with applicable notes. There are a schedule of findings and question costs that is included, basically the results of what happens. And then also there is the corrective action plan. Findings happen, but then once you have a finding, then the federal government wants to know that, okay, if you found something and it's enough where we have to report this, what are you going to do to fix it? So, and then there's also going to be a summary of prior findings and how that applies into the current year's report to see that, okay, if you had findings last year, did you do something about it to fix the problem? So as I mentioned before, you have your schedule of findings and question costs, which are going to summarize the results of the audit from the financial statements, but it's also going to talk about what you saw in the Yellowbook report. Did you have any material weaknesses or significant deficiencies in internal control over financial reporting? And also, was there any non-compliance with laws and regulations in those financial statements? And then you're going to summarize the federal awards as well. What type of opinion you had? Did you have any material weaknesses or significant deficiencies? Did you have any material non-compliance, which is going to be done in a summary form and then also detailed specifically what's in the finding? And then identifying, well, what are your major programs? You're going to tell the users of the report which programs specifically were audited, what was the magic threshold for a type A program, which is included in the summary, and then whether or not you're a low risk auditee. So it's important, just besides for planning purposes, this information gets disclosed and is out there. So that's why auditees really need to understand why it's happening. And then the end result is that we're going to be filing a data collection form. Now, this came from specifically from the Government Accountability Office, from an analysis of basically what's the flow of data that comes in. So once we're doing is we're taking the results that are in that bound single audit reporting package and we're putting it on a website. We're including information that's lifted directly from that report. We're putting it on the website for filing for data aggregation purposes, so you can find this information. And then also, you're putting a PDF copy of the report and the financial statement audit in this data collection form filing. Now, there's no personal identifiable information that's supposed to be included, but you're making sure that all that information is there, and then you submit it to the Federal Audit Clearinghouse, which then does some logic checks to make sure that all the required elements are there. And then once it is, then that information in that summary, plus the actual single audit report itself, the details, is out there for general consumption. So the deadlines. The single audit is due to the Federal Audit Clearinghouse 9 months from fiscal year end, and there are no extensions. Under COVID, we had some extensions here and there, and then a few other odd situations, but most of the time there is no extension. So, and if you are filing that report and it is late past the 9-month deadline, that is considered to be non-compliance, and in the subsequent period, it theoretically should be reported by the auditors. So now we've talked about deadlines, our time together. Let's wrap this up. And Gina, I'll let you drive on the rest of the way because we want people to be thinking about what's important for preparing for these single audits.
Yes, exactly. So now you have a single audit. How are we going to prepare? So we're going to go first through some auditee responsibilities. First, you got to take in consideration maintaining that effective internal control over the federal award. You now have this grant. You got to take ownership of it. Make sure you're complying with those regulations. If there are any non-compliance comes up during the internal process or the audit, just make sure you're taking action sooner rather than later, making sure you ensure the proper use of those funds. Once the single audit has started, there's going to be many requests from the auditor. So having any grant-related information readily available will make for a smooth audit. And then lastly, an auditee should just take reasonable measures to safeguard personal information, because at times, like we mentioned, you could be spending those funds on payroll transactions. So the next thing is talking about some auditor responsibilities. So as auditor, we have to attain an understanding of internal control to obtain a low level of risk over non-compliance. So to do that, we test the effectiveness of that control and determine that the client complied with those controls. So not only do we test the controls, but we test that CFA to see whether it's stated accurately, and it's going to tie back to the financial statements. So ways that we test controls is by inspecting documentation, audit evidence. Not only does the client have to design that control, but we have to see that it's implemented as well. So we're going to discuss with our clients any questions regarding federal awards. We're going to test those individual transactions to see if those controls are also in place. A walkthrough of the control or the client having that control documented is not enough evidence for us to conclude that that control is in place. And as auditors, we are primarily concerned with rates of deviation. So if we're seeing non-compliance consistently, that just can lead to a bigger issue and potentially findings. And then once we determine what our major program is going to be, we're going to test all those relevant requirements for that program. And then after the auditor has concluded the testing of internal controls, we just must gain enough evidence and understanding that we tested it's adequate enough to express an opinion. And then we're going to include that in our single audit report. So some main things that we kind of want to talk about of what to provide when it comes to the single audit is the first one is grant agreements. That's going to be what occurred during the year, and that's going to help us determine what is federally or state funded. The key thing in a grant agreement to show that it's federally funded is by seeing that ALN number, used to be called CFDA. So some agreements are not very clear in the type of funding. So at times we're going to have to reach out to that agency, get that clarification, or do a little research because we want to make sure we have the right federal funds, or if it's state funds. I kind of recommend having a grant tracking spreadsheet on what's been spent on the grants. I just think it's a really great tool to have. It can be very simple, having some columns in there. What grant was awarded, how much has been spent, how much has been reimbursed so far, how much is still waiting to be reimbursed. So this is going to kind of become useful at the end of the year, see what AR potentially has got to get booked, tie all the grants together, and you can also tie it back to your financial statements. And then this spreadsheet, you can use it to then create your schedule of federal expenditures, just grabbing those federal grants and kind of keep it all in one place. So even if you have a draft CFA in the early stages of the single audit, that's really going to help early on determine what those major programs are going to be. And we can also try to get a head start on that testing. So as we mentioned earlier, we talked about those type A thresholds. That's $750,000. That's that key number right now. However, if a program hasn't been tested in the last 3 years, so for example, if we're auditing a 12/31/24 engagement, and this program that reached 750 hasn't been tested since 2021, we're going to be required to test that program this year. And then again, that other factor is that 20-40% coverage, making sure we have enough coverage of whether we got to test 1, 2, or 3 major programs potentially. And then once we determined what our major programs are, we're going to look at that compliance supplement, see what's applicable, whether we're looking at part 2, get that matrix. And if it's not in part 2, we're going to look now in part 7. So for any direct and material compliance requirement that we determine is applicable, we got to evaluate that internal control over compliance. And then we also need to evaluate identified risks related to the major programs and then document any specific risks to those requirements. So if a client actually ends up having more than one major program, the risk of material noncompliance has to be determined for each major program. You can't use the same risk assessment for multiple programs. And then depending on the attributes being tested, we might be looking at sample sizes for those transactions. That's going to help us determine what our sample size is going to be based on the population. And then again, if you have multiple major programs, you're going to be looking at sample sizes individually. You cannot determine a sample size for one attribute over multiple programs because we have to have evidence for each individual major program. But you can use dual purpose testing to test the operating effectiveness of a control and test whether the auditee was in compliance with the program. But the sample size is going to be the larger of the 2 samples, as if the tests have been performed separately. So just on the work paper, we want to document what is a test of control and what's a test of compliance. Now, I think if there are any questions, I think we'll go over those.
Yeah, I think we said we've got about, so we're a minute or 2 long, so apologize for that, but have a lot of good things to talk about. So we did have 2 questions we can briefly go through. The first one from an attendee was, how can a municipality ensure that a state grant awarded is not a federal pass-through to know if whether or not a single audit is needed? And the first thing that has to happen is that you're going to look at your grant agreement. You're going to look at the specific language. Typically, it will spell out whether this is federally passed through, and it will include the ALN number. And we're also specifically say, hey, that the grant is specifically subject to the single audit requirements. If it's not clear in that grant documentation, it is your responsibility to talk to the funding agency to specifically confirm whether or not it is subject to the single audit or not. We did have a couple of situations with clients across the country where they thought funding was just state funded, but it turns out actually it originated from the feds and it brought in the single audit requirements. The second question we've got in here is to reach the $750,000 magic threshold for triggering a single audit, would a municipality use the accrual or cash basis method under CEFA for construction related projects? Now, a CEFA could be cash basis or accrual basis, depending on your basis of accounting. And yes, we have seen situations where an accrual basis entity is doing a cash basis CEFA, but it has to be specifically spelled out in the notes to the CEFA. I usually like to see it one way or the other. You don't like to have mixed up because it gets confusing. So based on that basis of accounting for the CEFA, that's what's going to drive. So if your CEFA is on the accrual basis, you're using the accrual basis to determine whether or not those costs get accrued in and theoretically need to be picked up as part of the threshold for determining whether or not you're going to reach to that single audit threshold. So that was what we had as far as questions. So Rachel, I think we're at the point of wrapping up. So if you want to go ahead and take care of what you got to take care of. We wanted to say thank you to everybody from our perspective. We enjoyed spending the time with you and looking forward to seeing all of you in future sessions in the Yellowbook series.
Wonderful. Thank you both for joining us today. Thank you everyone for hopping on with us. I hope you have a wonderful day and keep an eye out for those certificates. They will be emailed to you by early next week. So with that, have a great rest of your day.
Thank you.